The following is a presentation of TFNN.
Let's go to our first call of the day. We'll talk to John in Austin, Texas. How you doing today, John?
Way too good, Ken. Appreciate what you're doing. You do such a great job. This show is fantastic every day.
You're a good man, John. Really appreciate it. Thank you.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Happy Tuesday. Welcome to another edition of Breakout Investing on TFNN, now 5 days a week from 3 to 4 Eastern, just ahead of the Tom O'Brien Show from 4 to 6. The number to use to talk to me is 877-927-6648, 877-927-6648. If you can't listen to my show live, you can pick it up as a podcast on iTunes. And don't forget, you can listen to all TFNN programming on your smartphone. You're out and about, not in the car, not at your PC. Just open your smartphone browser, type in tfnn.mobi, and you can listen to the stream that way as well. Tiger TV is something you should also check out. That is available on the homepage of tfnn.com. It is also viewable on your handheld device as well. If you want to look at charts live right along with me, you can use Tiger TV to do that. Channel 1, the show is carried live. It is archived on Channel 13. You know, the market was looking pretty good here for a little while, and then about a half hour ago, maybe 20 minutes to a half hour ago, Senate Majority Leader Harry Reid made some comments about fiscal cliff talks, basically that they're not going very well. Little progress is being made, he said. He said it's time to move past the happy talk, happy chatter, and just like that, the indices turned tail. Taking a look at the Dow Jones Industrial Average with a little more than 50 minutes left to go in Tuesday's session. The Dow is trading in the bottom half of its range now. You can see finding some initial resistance here at its 200-day simple moving average. Right now, the Dow is down close to 56 points, 0.4% to 12,911. S&P 500, let's see what the benchmark index is doing. Trading in a tight range, again, above its 200-day moving average, but below its 50-day moving average. The S&P 500 down a little more than 3 points to 1403. And the NASDAQ Composite, the tech index, is basically flat on the day, working on its 7th straight price gain, but does it find resistance at its 200-day moving average? That looks like a likely scenario at this point. The NASDAQ's 200-day moving average is at 2985, 2986. The NASDAQ is at 2977 right now. So approaching a key resistance level here. We'll see what the NASDAQ decides to do. Whether or not this market keeps moving higher is really predicated on, if new money continues to come in from the sidelines. We did get some mild follow-through in the market last week on Friday, the day after Thanksgiving, a half day of trading. We had 1.3, 1.4% gains for the major averages. I call it a mild buy signal just because it was only a half day of trading and volume was very, very light. But for the time the market was open, it was a fairly strong session, with indices finishing near session highs and pretty good percentage gains to boot. Now, after you get a follow-through day, in the major averages, which we saw Friday, what you don't want to see in a 1, 2, 3 day window is a higher volume decline in the major averages. Generally speaking, you don't want to see immediate signs of institutional selling in the market very soon after a follow-through day. And right now, we've got volume on the New York Stock Exchange tracking about 15% higher than what we saw on Monday, which was 629 million shares. That's still below average, but we are tracking 15% higher. NASDAQ volume tracking about 10 to 15% higher than Monday. Monday we had 1.6 billion shares. So it was interesting. The folks over at Investors Business Daily called yesterday on the New York Stock Exchange Composite Index. It fell 0.3%. Of course, volume was heavier than Friday. Friday was a half half day of trading, but they called it a distribution day for the NYSE Composite. And I don't know. The session yesterday did not have the feel of institutional selling at all to me. Again, 1.6 billion shares on the NASDAQ, 629 million shares on the NYSE. Both of those volume levels are below average. Of course, it was higher than Friday because volume was only a half day on Friday. But the indices also finished at their session highs Monday. So you had early weakness. You had the NYSE Composite close near its high, the S&P 500 closed near its high. All the major averages recouped earlier losses and finished near session highs. So IBD called it a distribution day, a higher volume decline on the NYSE Composite. That's certainly debatable. Now, if we finish near lows today, and the S&P 500 loses, say, 0.3%, 0.4%, 0.5%, something like that, and volume does end higher than Monday, that is a more pronounced day of distribution in my book. So either way, whether it was distribution on Monday or we end up seeing distribution today with percentage declines and volume coming in higher than Monday, I'd put a little more stock in the selling today. But either way, the market trend is upward for now. If we do, finish near session lows today, I'll be a little bit concerned about this rally because, again, you don't want to see a higher volume decline so soon after a follow-through day. So, there's just a lot of again, there was a lot of received some email and a lot of skeptics out there about the quality of this rally, and can you really call a new uptrend here on a half day of trading? And I understand that argument too, but I have been putting money to work in the Ultimate Growth Stocks model portfolio. I bought 2 names last week. I bought 2 more this week that are behaving pretty well, actually. So I'm certainly not ready, even if we do get a higher volume decline today, I'm not ready to completely throw in the towel here and start getting defensive again. I still think the case is pretty good for gains between now and the end of the year. And we'll see how that goes. I'm seeing decent leadership out there, some decent setups to work with. As I mentioned in my weekly update earlier today, I'm not seeing them in spades. It would be nice to have a bigger crop of stocks with the potential to lead, but they could come more into focus over the next couple of weeks. So at this point, let's look for signs of institutional buying. Let's look for higher volume gains in the major averages, lower volume declines. That would be picture perfect price action. And we'll see how it goes. Taking a look at the yield on the 10-year note, down slightly to 1.65% today. The 30-year bond down to 2.79%. Dollar is in rally mode. That is why weighing on stocks a little bit, up 16 ticks to 80.41. And I'll check in on the U.S. dollar index here, the chart, and see what it is looking like. See a big drop for the U.S. dollar index on Friday when we had that big rally, and then Monday you can see it stopped just right above its 50-day moving average here. So we'll see if it can ultimately find support. So Monday, U.S. dollar index closed at 80.03. It is trading higher today, recently at 80.41. Sorry, the close Monday for the U.S. dollar index was 80.25. So it is now trading around 80.41. Gold today down $7.30 to $1,742.30 an ounce. Check in on the Spider Gold Trust here, the liquid ETF. It jumped above its 50-day moving average on Friday. 2 days in a row now of declines, pretty much trading right at its 50-day moving average. Still not clear to me that the GLD is ready to continue to work its way higher here. Wouldn't be surprised to see more weakness, in fact, in the GLD. Crude oil today down 56 cents to 87.18 a barrel. All right, so we had some news out of Greece as well. Eurozone finance ministers and the International Monetary Fund reached a deal on a bailout for Greece. That means that just over $55 billion in loan installments is going to be headed Greece's way. Most of it will be paid in December. There will be additional payments in the first quarter of 2013 if Greece meets requested austerity measures. Take a look at shares of Amazon today. AMZN company came out with news that sales of its Kindle devices more than doubled over this year's Black Friday weekend compared to last year. Amazon does not reveal specific unit features, but you can see Amazon working on 7 straight up days. It is now back above its 50-day moving average as it works on the right side of a base. Still has quite a ways to go to get to its recent high around 260, but definitely Amazon in rally mode, and it is looking to extend its winning streak today. Taking a look at CAG, shares of Conagra, going to be the acquiring company. They are buying Rawcore. They're a private label food manufacturer, so Conagra buys Rawcore for $90 a share in cash. Conagra shareholders like the sound of this deal. They sent shares higher by 4.5% to $29.58. This is a deal worth about $6.8 billion. Again, it values Rawcore at $90 a share, so wouldn't be surprised to see Rawcore trading right around that price level. You can see Rawcore up 26.5% today to $88.81. Conagra has made a series of bids for Rawcore. Apparently the latest is good enough for Rawcore, and the stock is rallying sharply on the news. Taking a look at shares of Gilead Sciences. They came out with good news today. Said the first phase 3 data for its hepatitis C drug that has a lot of potential. They said there's a 78% cure rate for a minority subset of patients. Gilead has been a very, very strong performer in the market. You can see a recent gap up. It's been holding gains nicely. Stock not really responding to the news today. It is down 68 cents to 74.79. But good phase 3 data for its hepatitis C drug that many see big potential for. Another biotech looking interesting here, high quality name in the space, Celgene. Celgene, like the look of Celgene here. This is a classic example of a base building stock. The way I manage my Ultimate Growth Stocks model portfolio, now that we are in an uptrend, we don't know how long this uptrend is going to last, but it is a matter right now of looking for stocks that are forming the right side of bases, stocks that are perhaps getting in position to break out here. That story has not completely played out with Celgene, but it is forming the right side of a base here. And Celgene just recently announced late-stage trials of its drug Abraxane that showed improved survival in pancreatic cancer patients. Its main drug is Revlimid, used to treat multiple myeloma. So Celgene looking interesting here, forming the right side of a base. It could be a leader going forward. Good one to watch in coming days. We'll be right back, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You you take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone. Quick check on the markets. The Dow right now down 58 points. Call it 0.5% to 12,909. S&P 500 is next, down close to 4 points, 0.3% to 1402. Still trading above that 1400 level. Selling not so much pronounced in the NASDAQ Composite. It is down not quite 2 points to 2975. We were talking about Celgene before we went into break. I was showing you a daily chart. Wanted to show you a weekly chart of Celgene as well. It's a breakout candidate here. There's no doubt about it. The weekly chart gives us a little better perspective. It's been working on a big old cup with handle base here, swing point of 81.24. It's still about 3 points away from that swing point, but again, in the search for emerging leadership in the early stages of a new market uptrend, we want to keep an eye on Celgene. A stock that is, definitely has been showing signs of accumulation in recent weeks, and it is, hanging in there pretty well, and wouldn't be surprised to eventually see it retest that high of 81.24. Also want to show you a daily chart and a weekly chart for Regeneron Pharmaceuticals. This was a former holding in my Ultimate Growth Stocks model portfolio. It was a nice winner for me, and it is has really been in rally mode for the past couple of weeks, and I just love how it's holding gains up here. Remember, this was a $140 stock about 3 weeks ago. It has rallied all the way back to 174.35, and we'll check in on a weekly chart here for Regeneron Pharmaceuticals, and so far this week it is trading tight as a button, holding on to big gains the prior 2 weeks. So it's made a big price run already, but there's a lot of positive buzz around this company's drug Eylea, which was approved by the European Commission as a treatment for wet age-related macular degeneration, a disease that causes blindness in the elderly. All right. 877-927-6648. Going to take the first call of the day from beautiful Tampa, Florida. Talk to Tom, who wants to talk KGC. How you doing today, Tom?
Hey, good, Ken. How you doing?
Pretty good, pretty good.
Good. A phenomenal, great radio show, by the way. I love your radio show, man. It's awesome.
Appreciate it, Tom. Thanks very much.
Yeah. Hey, KGC, are you anything about a takeover there?
Haven't heard. I have not heard. It's definitely under accumulation. So it definitely has that going for it. You basically look back since early to mid September. A lot of its price gains. It's been rising and expanding volume. There was more expanding volume earlier this month. And technically, it's a pretty sound stock, and it's under accumulation. Out of the gold miners that are out there, it's definitely has potential. As far as a takeout rumor, I personally haven't heard of anything.
Yeah, I heard some whispers this morning on it. So I was just curious if you heard anything. Couldn't find much news on it. So
yeah, I haven't, but it's interesting to see how the stock is traded today, because it wouldn't be surprised if there were takeout rumors earlier. It did hit an intraday high of $10.52. It is down near its low for the session, so maybe those takeover rumors were short-lived, because after early strength, it is fading here. But then again, the broad market has been fading too, thanks to Senator Harry Reid's comments about lack of progress in the fiscal cliff talks. So I like Kinross, though. It's one of the better miners out there.
Yeah, I go way back with it, back in the BTO days when they bought that out. So
there you go.
But, the only thing I don't like about it, they got a big mine over in Russia, and I don't own it. I was just curious when I heard that this morning, and it's something like a $660 million buyout on that. But
it's when I'm looking at just some of the earnings estimates, they're expected to earn 76 cents a share this year, and then looking out into 2013, they're expected to earn $1.10, which would be up 45%. So apparently they got some pretty good earnings prospects for 2013. Maybe there's a company that's interested in that growth. It would be definitely a name to keep an eye on here. Like I said, the stock has been under accumulation. You look at all the gold miners out there; some are under distribution, some are just kind of middling around, but this one has definitely been showing accumulation trends for the past 3 months or so.
Okay, great. Again, I appreciate it.
All right, thanks for the comments, Tom. Appreciate it as well.
Have a great day.
All right, Kinross Gold, the one thing it's got going for it, it is under accumulation, and that is a positive thing for a stock, no matter what industry group or what sector you are in. Coming back in about 3 to 4 minutes, half hour left to go. Breakout Investing on TFNN. Folks, Ken Shreve with you. We will be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back to Breakout Investing on TFNN. Ken Shreve with you on this Tuesday, and checking in on the markets here, seeing where we're at. Let me just pull up my quote. Dow hanging in there, down 63 points to 12,904. S&P 500 down about 5 points to 1401, and the Nasdaq Composite down close to 3 points to 2973. Took a call from Tom in Tampa inquiring about Kinross Gold, KGC, and this is a stock that has been showing pretty good signs of accumulation. Made a nice move between August and October. Came down a little bit, has been working its way higher. And I did see a note from Bloomberg earlier this year. This was back in January, February, that some Canadian miners, some large cap Canadian miners like Barrick Gold, ABX, Newmont Mining, even companies like Goldcorp, GG, and Anglo Gold Ashanti were mentioned as possible suitors. This was back earlier this year for Kinross. So as far as rumors today about the company is back in play as a potential takeover target, haven't seen anything, but we'll see what the future holds for Kinross. Special dividends. Boy, this fiscal cliff, the likelihood of higher debt taxes for corporate America, that has resulted in several companies now announcing special dividends. Just recently, let's take a look at Brown and Foreman, the B shares. The company declared a special dividend of $4 a share on both its Class A and Class B shares, payable December 27th to shareholders of record December 12th. Brown Foreman, after an early pop, it is still up 1.8% to 69.23, but it is well off its intraday high of 70.87. We also had Las Vegas Sands declare a special dividend as well, and it is moving nicely today, up 5.5% to 46.47. Las Vegas Sands announced a special dividend of $2.75 a share, payable December 18th to shareholders of record December 10th, and then also Dillard's, DDS. Shares of Dillard's gap up today, still up 2.1% to 87.65, but off its intraday high of 88.71. Dillard's declared a dividend of $5 a share on Class A and B common stock, payable December 21st to shareholders of record December 7th. So it'll be interesting to see which companies between now and the end of the year, or at least over the next couple of weeks, declare these special dividends. Companies are worried about higher taxes in 2013, so a lot of them are declaring special dividends now. Taking a look at shares of Apple, well, they fired the guy in charge of the mapping software that has been such a debacle for the iPhone 5. Apple hanging in there. Looks like possible resistance at the 200-day moving average. Shares of Apple down $5.03 today. Almost 0.9% to 584.50. Its 200-day line is at 594.76. So that's the problem with stocks that are coming up off their lows. They invariably face a lot of overhead supply, a lot of people that are selling, that bought on the way down to break even on their investment. So for those of you that bought when Apple was down around $515, $520 a share, it was a tremendous trade. The stock has moved up nicely off that low, but it is not going to be a straight road back up for Apple, again, because of inevitable overhead supply that it is going to face. Now, if this market rally has legs and we do see signs of institutional buying, new money coming in from the sidelines, which I still think is a possibility, you don't know what headlines are going to come out of Capitol Hill. I mean, Harry Reid says today he's not happy with the progress that's being made. We could hear a headline tomorrow that, hey, progress is being made, and then boom, you get a quick 100 points on the Dow. So still a headline-driven market, but if new money continues to come in from the sidelines and this follow-through day that we saw on Friday has some juice, has some legs, we could see Apple move higher along with tech stocks in general. I wanted to take a look at Thor Industries. This was an interesting company. Thor made a very impressive move on November 6th, right here, where it gapped up in price. On that day, the company reported preliminary earnings that were well above the street estimate. Today, they actually reported earnings of 58 cents a share, up 41% from a year ago. Sales were up 30% to $875.6 million, but the stock is getting creamed today, down 11.5% to $38.59. the RV maker, and it's also a major builder of commercial buses and ambulance, said it is struggling with tough competition, price discounting, and uncertain economic conditions. So investors don't like the sound of that one bit, and shares again down 11.5% to 38.59. Economic today, we had October durable orders came in flat. That was better than expectations for a decline of -0.4%. In September, you might remember, orders surged 9.2%. This time around in October, excluding transportation, orders were up 1.5% versus 1.7% in September. That was also much better than expectations. Case-Shiller September home prices up 3%, mostly in line with expectations. Among the 20 cities tracked by the index, 13 posted monthly gains in September. Las Vegas and San Diego saw the largest gains from the prior month, both up 1.4%. Phoenix saw the biggest year-over-year gain, with home prices there up 20.4% from a year ago. Got to give the home builders credit here. It looked like they were ready to throw in the towel, but checking on the ITB, iShares Dow Jones U.S. Home Construction Index Fund, a popular ETF, it has been in rally mode since hitting a low earlier this month of around 18.5. It is back up to $20.56. Only up 1 cent today, but back above its 50-day moving average, still showing relative price strength. The three top holdings of ITB are Lennar, PulteGroup, and D.R. Horton. Let's check in on all three of those stocks today. Shares of Lennar up 14 cents to 38.68, off its intraday high of 39.30. PHM is PulteGroup. You can see all these charts are going to look very similar. PulteGroup working on, what is that, 9 straight gains? 1, 2, 3, 4, 5, 6, 8 gains in a row for PulteGroup. It is up 6 cents today to 17.14. And finally, DHI. That's going to be D.R. Horton, the third highest weighted stock in the ITB. Much different chart here. It came actually corrected all the way down to its 200-day moving average, has rallied back. It is up 6 cents today, near its session low to 1956, still underneath its 50-day moving average at 2081. So definitely inside the group, Lennar and PulteGroup showing much better relative price strength than D.R. Horton at this point. Final piece of economic data today, the Conference Board said that its consumer confidence index rose to 73.7 in November from 73.1 in October. That was better than expected and the best reading since February 2008. Taking a look at some movers today. Wanted to take a look at LNN. This is Lindsay Corporation. Look at the daily first. See a little breakout taking shape here for Lindsay Corporation. This is a company that makes irrigation systems. Not a sexy industry, but this is a high-quality name in its industry group. Up 2.4% today to 78.37. Quick check on the weekly chart here. Lindsay Corporation. We'll see it is trying to take out a swing point here of 79.50. So good technical setup for Lindsay Corporation. Again, when we're in the early stages of a rally here. We don't know how long it's going to last. It could be a tradable rally, could amount to something more than that, or it could fall on its face. But since we did get a mild buy signal from the market Monday, these are the types of charts I'm looking at. Charts that are, stocks that are fundamentally strong, that are showing relative price strength. Your big market leaders tend to make their biggest moves when they are up near new high ground. So Lindsay showing relative price strength ahead of the follow-through day last Friday. Here it is flirting with a breakout over 79.50. Good name to watch here. Remember MED, mentioned this name on yesterday's show. Speculative small cap, thinly traded. Talked about its technical setup on yesterday's show. Look at the move it is making today. Up 6.9% to 31.48. Got a beautiful technical breakout here. We'll check in on the weekly chart for Medifast as well. And this chart just was screaming a breakout here. So the breakout is over 29.96. Good cup with handle breakout, and Medifast is a distributor of weight and disease management products. Now, typically I like to buy liquid institutional quality stocks. Medifast does not quite fall into that group. However, it does have outstanding fundamentals. It is showing relative price strength, but I do have market cap thresholds and volume thresholds that I use when I buy stocks for the Ultimate Growth Stocks model portfolio. This company is just a little too small for my taste. Small companies can go up in price and outperform materially. Medifast has that good combination of fundamentals and technicals. Taking a look at Wabtec. This is an acronym for Westinghouse Air Brake Technologies. Working on the right side of a base here. It's not quite ready, but again, an example of a base building stock. Wabtec provides technology-based products and services for the freight, rail, and passenger transit industries. Working on 3 straight days of gains, back above its 50-day moving average, up 1% today to 82.92. And we'll look at a weekly chart for Wabtec here. And again, we'll see the right side of a base forming here. A breakout candidate, but it still has to form the right side of its base in preparation for a possible breakout. Another kind of small cap, thinly traded name here, APOG, Apogee Enterprises. Interesting business here. They're a glass company. Huge move for the stock today. You can see sideways movement for several weeks in a row. Big, huge breakout, up close to 11% today to 22.99. Look at its weekly chart, and you see a good solid breakout here from what I would call a flat base, breakout over $20.85. Yeah, the thing with Apogee, $629 million market cap, average daily volume of around 160,000 shares. Not quite an institutional quality name that I like to focus on, but again, you can get big moves from some of these smaller names. We're seeing it with Apogee today. We're also seeing it with Medifast as well. And shares of New Market, NEU is the ticker symbol here. Nice move for New Market today. You see a big gap up for the stock on October 26th. I'm sure that was earnings related. It moves sideways, and it makes another big move today, breaking out over resistance. Again, the issue here, it's a stock that trades 68,000 shares a day. Just too thin for my taste. Still a nice technical move for the stock, up 3% today to $263.53. Interesting to see such a high-priced stock with such a thin average daily trading volume. Valspar, another one. So you can see the market is serving up technical breakouts here. This is good to see. Valspar made a big move last week. It's holding gains nicely, up another 14 cents today to 61.54. Let's take a look at its weekly chart here, and we'll see a nice breakout from a flat base structure. Valspar is a paint and coatings maker. You had a flat base breakout last week over $60. So you can see holding gains nicely. It's been a big price move since the fall winter of last year. Continues to perform very well. So some decent long setups out there. There are stocks that are moving, no question about it. There are other stocks out there that I don't think have the potential to be market leaders going forward. One name I would put in this group is Priceline, PCLN. Let's check in on Priceline here, down $2.73 today to $637.26, facing some consistent resistance here at its 200-day moving average. This, to me, just looks like a stock where buying demand is drying up. And after a huge price run, I think the chances for lower prices here outweigh the chances for higher prices. Recent price and volume trends in its chart tells me that, and so I'm not a big fan of Priceline here, nor am I a fan of Whole Foods Market. Whole Foods Market, another stock, I just think the big money has been made here. You're talking a gain of several 100% over the past 3 years or so. Whole Foods Market looks like it's in some trouble here, down 68 cents to 91.47. An industry group peer of Whole Foods Market, the Fresh Market's coming out with earnings tomorrow before the open. We'll see what Fresh Market is up to when we come back. Ken Shreve with you. You're listening to Breakout Investing on TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing on TFNN. About 5 minutes left to go in Tuesday's session. And I got to tell you, it looks like we're going to end up seeing a distribution day today for the NYSE indices, which is potentially problematic considering we saw some mild follow-through for the market on Friday. It doesn't mean that this uptrend is doomed from the start, but you don't like to see a higher volume decline, at least one, so soon after a follow-through day. Now, no, there were a lot of people that were skeptical about the big percentage gains in the market on Friday, especially with a half day of trading. Did it really convey strength and power? You know, some people say yes, some people say no. Again, I thought the distribution day that IBD called yesterday for the NYSE composite, I thought that was a bit questionable, only because the NYSE composite closed near its high after early strength. But at least when you look at the S&P 500 as we head into the close here, it is trading at session low here, and volume looks like it's going to be about 15% higher than what we saw Monday on the NYSE. So this, I don't think there's any question that there is distribution today, at least in the NYSE indices. The NASDAQ right now not really down that much. It is now down, yeah, it's all the indices are bleeding here into the close. So NASDAQ down about 7.5 points, 0.3% to 29.69. So it does look like distribution for the major averages today, which I have to tell you does cast a bit of a pall on this buy signal that we saw on Friday. Not time to throw in the towel yet, but just something to keep in mind. Typically when you see a higher volume decline within 3 days after a follow-through day, which we saw Friday, it can sometimes mean the rally's not going to have much juice. So we'll see how that plays out. Coming up after the close today, well, let's talk about the Fresh Market, because they're coming out with earnings tomorrow morning. The Fresh Market TFM, and we'll see. They're expected to produce another strong quarter of growth, no doubt about it. Sales growth up, I think, 20%. I had their numbers here. Let me see. What did I do with it? Yeah, there it is. Earnings of 26 cents a share. We're going to be looking for Fresh Market. 26 cents a share, up 37% from a year ago, with sales up 21% to nearly $319 million. Now, look at the stock today, down 1.5%. It is coming down with the broad market here, but there do look to be some sellers in this stock ahead of earnings. Last trading around 60.46. You looked Friday, it actually broke out in decent volume. It traded, when it normally trades in a full day, it traded in a half day of trading Friday. So relatively speaking, it was pretty good volume on Friday when it broke out, but 2 days in a row down in price. Questionable price action ahead of earnings, but again, wouldn't be surprised to see a strong quarter from the Fresh Market. This company came public in November 2010 at $22 a share. It is a $60 stock now, so growth prospects look good for this company. Still in the early stages of growth, which is why I like it more than Whole Foods Market at this point. After the close today, Focus Media Holding. This is a China-based company. They operate a network of LCD advertising displays in China. It is still holding above support here, but not by much. It is down 22 cents today to 23.74. Focus Media Holding is expected to earn 70 cents a share, up 19% from a year ago. Sales up 22% to $256.6 million. Also after the close, PVH, Phillips Van Heusen, and Green Mountain Coffee Roasters after the close today. Coming up next, the Tom O'Brien Show. I'll see you back here tomorrow, 3 o'clock Eastern, for another edition of Breakout Investing. Have a great afternoon, everyone.